Thanks for taking the time to watch our tutorial video on this important, often mission-critical subject. Are you willing to learn and then do what it takes to be part of the rare 6% of startup companies that successfully receive funding from angel investors? Our company has been helping startup companies for 3 decades, so we understand how critical funding from angel investors can be when a company wants to grow bigger or faster than simple bootstrapping will allow. If you watch to the end, this video will show you some of the major steps you will need to take, and some of the severe, deal-killing blunders you need to absolutely avoid, if you are serious about being part of the 6% who successfully receive funding from angel investors. We hope you find this tutorial helpful. If you gain at least one aha moment or epiphany, we would very much appreciate you doing us a big favor by taking a few seconds to like this video and subscribe to our new channel. Most startup companies have a pivotal need for angel investors to provide investor capital to their company in order for them to move from their current point A to their most desired post-funding point B vision for their company. Without these prospective investors, most startup companies stagnate and are unable to ever reach their 5-year goals and be a major success. But there is a major snag: only 6% of companies succeed with funding from angel investors. Based on a decade-long research project by the Kansas City-based Kauffman Foundation on more than 5,000 new firms, only 6% of companies were successful in obtaining funding from angel investors. Will your company do what's needed and necessary to be part of the 6% successes, or will your company be part of the 94% failures? We absolutely hate seeing startup companies fail, especially for foolish mistakes and oversights that could have been easily fixed. After working with startups for more than 3 decades, we're not surprised to see that 94% of startups never receive even one dime from angel investors. The problem is that almost all startup CEOs are 100% inexperienced at raising investor capital. They don't know the minuet or dance that's necessary, or the necessary documents, and the format of those documents, that are expected. They also are not fluent in investor speak and consequently don't understand the nuances of the pitch that's going to get the attention of angel investors. Too many of these CEOs believe that all they need is a great pitch deck to convince angel investors to stroke the check to invest in their company. All of this is totally understandable since none of this stuff ever seems to be taught in school. As a result, every time these startup company CEOs make their pitch, they come across as immensely naive as to the fundraising process, and the angel investors' primary takeaway is that they are completely unconvinced that the startup company CEO has the business acumen to successfully execute their usually equally naive business plan and unconvincing financial projections. All of this amplifies the apparent risk factors that are already inherent with investing in startup companies. Understandably, angel investors want to do everything they can to mitigate and eliminate risk to protect their capital. This means that most of these startup CEOs and their companies will end up with a 94%. These failings usually have nothing to do with the CEO's intellect or their expertise with the other multitude of skill sets required to start and run their company. It almost always has everything to do with not understanding the process of fundraising. Since hope is not a plan, exactly what are your detailed, action steps to rise above the noise, and do what it takes to be genuinely ready for prime time so that you and your company are part of the 6% success stories? Are you raising investor capital from strangers for the first time? If so, you're going to find that it is significantly different and much harder than raising money from friends and family, since those strangers don't know, like, and trust you yet. Your level of documentation, presentation skills, preparation, and your detailed 5-year financial projections all need to improve by at least 1 order of magnitude. That's 10 times better than you probably have right now, and for some companies, it's 2 orders of magnitude, or 100 times better, that will be needed to rise above the noise level from the 94%. Since they very rarely teach this stuff in school, you almost certainly will need a fundraising mentor if you want to really improve your 6% chance of receiving funding from angel investors. There is what seems like a near infinite number of ways entrepreneurs can unintentionally but royally screw up their fundraising. This is a major reason why 94% of startup companies fail with angel investors. With even just a few hours a week of our help, an experienced fundraising mentor like the chief implementer from our company can make a huge difference in minimizing these screw-ups and greatly improve your chance of being part of the 6%. This is mostly a case where you probably don't know what you don't know, and you need help from someone who genuinely knows. This includes hidden landmines, dead-end trails, a badly prioritized action plan, grossly inadequate or erroneous driving assumptions that create badly flawed financial projections, often fatal regulatory traps that could even get you thrown into jail, and not knowing what turns prospective investors on, and not knowing what turns prospective investors off. The list of these nuances will seem endless, and what seems petty will often turn out to be deal killers. If you don't have the right, highly experienced fundraising mentor like the chief implementer who has genuinely been there and done that with thousands of startup deals, your probability of being part of the 6% successes is probably close to 0. The good news for you is that you should be gaining insights galore as you digest this entire presentation. You can rise above the noise of many of those other 94% startup companies that never get this message you're hearing right now, so that your competition for funds will continue making the same mistakes. But your newly acquired insights and knowledge will only help you if you immediately implement what you see and hear right now. What if there was an affordable, highly experienced, senior-level, fractional mentor available to you? Someone who can mentor and help you to properly set up and price your offering, produce the 12 necessary documents, and make sure you are genuinely ready for prime time before confidently pitching your first prospective investor. Someone who can then present your offering to his network of angel investors. That available fractional resource in our company is Robert Lee Goodman, CEO and Chief Implementer of CEO Resource LLC. Let me tell you a little about Robert's unique, combined experience, background and credentials that specifically relate to startup operations and investor fundraising that could be directly beneficial to you and your startup company. Robert has over 15 years of direct, startup experience as founder, CEO and managing principal who directly owned and operated $100 million of income property including multifamily, office warehouse and self-storage facilities. He managed, through his wholly owned subsidiary, over 45,000 rental units across 5 states. That's a lot of units. Also, after founding the company, he grew it into the 7th largest self-storage operation in the nation, employing over 1,000 folks. Robert was founder of a software company that raised over $4 million from angel and venture capital investors before he took the company public. Robert successfully raised over $30 million for startup investments from 1,200 investors and VC through 43 legally compliant startup Reg D offerings he personally prepared and for which he served as general partner. For the past 30 years, Robert has focused solely on helping startup and emerging companies with their business planning, fundraising, implementation and mentoring of the CEO and senior executives. During that time, he has already directly helped thousands of diverse startup companies and their CEOs. Could you and your startup company greatly benefit from even just a few hours of fractional help per week from Robert for both your operational issues and for your fundraising? Due to their lack of experience with fundraising, way too many startup companies naively think all they need to raise investor capital is a PowerPoint deck and a quick, and usually badly prepared, business plan with mostly meaningless financial projections. While that may sometimes work with friends and family funding, it almost never works with most angel investors, and never works with the large angel investor groups. If you want to be taken seriously when raising investor capital, you need a dozen essential, different documents that are specifically geared and focused on angel investors, and written in the precise formats that angel investors expect to see the information. These documents also need to be carefully crafted as sales copy written by an expert so that prospective investors share your genuine excitement and vision for your company's future. These dozen documents include a detailed action plan, a business plan, detailed meaningful, believable and achievable 5-year financial projections, a short pitch deck, a long pitch deck, a fundraising action plan, a 1-page summary, and an executive summary, and this list is still incomplete. If you take a look at our infographic on the right side of the screen, you can see the first 10 steps of the 53 steps that are required for fundraising success. As you look through all the 53 steps that are shown throughout this presentation, try to identify which step you and your startup company have as its current point A, on your path to your most desired post-funding point B. Hint, only check off, as done, any milestone that is actually completely done. Carrying on with our necessary dozen documents, let's not forget the required securities laws compliant private placement memorandum, the razzle-dazzle investor website designed, coded and implemented, the script for the 10-minute video pitch by the CEO, etc., 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 just to get ready for prime time. Did I mention etc.? Often, prospective investors will ask for even other documents beyond the dozen. Sometimes, they want to see sales and marketing plans, advertising plans and budgets, detailed driving assumptions for all the financial projections, your staffing plan showing timing, individual salaries, bonuses and benefits, along with job descriptions for the folks you have listed for personnel in your business plan, etc. Often, this stuff seems endless, and is sometimes requested by prospective investors just to see how detailed your thought processes were for your planning and projections. Often, the prospective investor asking for this won't even invest. Note well that there are also tire kickers galore who will seem to enjoy wasting your time when they have absolutely no intention to invest. An experienced fundraising mentor like Robert can usually ferret out these tire kickers quickly to minimize wasted time. But prospects are rare, and usually, you only have just one shot with each one of them, so you cannot waste a single opportunity, especially until you have reached the minimum funding for your offering. The key point is that all of this is just to get you ready for prime time. Being ready for prime time means that all of the above items have been fully completed and are proofread at least 3 times and are completely consistent including every number in all projections and documents, and, you, the CEO and other executives are coached on every number in every document so you are fully prepared for prospective investor questions. Getting ready for prime time is like opening night for a new Broadway play. Before the curtain goes up that first time, all the actors are hired, along with all the folks for all the supporting activities. All the rehearsals are completed, everyone knows their lines, all the script changes have been finalized, all the costumes are perfect, all the scenery is finished down to the last nuance and all the props are in place, and all the players are present. If any single part of all that isn't done right and near perfect and ready to go, opening night may also be closing night. Opening night for a new Broadway play, it's exactly the same thing as your investor capital offering. Every component of your offering needs to be finished and near perfect. Every corporate executive including and especially the CEO knows their lines by heart, and all documents are completed so that you can actually legally take the investor's check if they offer it. Please give this next question some very serious thought. Are you and your company going to be genuinely ready for opening night when the curtain goes up? If you try to do it without a highly experienced fundraising mentor like Robert to guide you through the near infinite number of deal killer nuances? Can you really do it alone, and if you do try it solo, is it worth the increased risk for you and your startup company? We hope you are finding this information helpful. If you gain at least one aha moment or epiphany, we would very much appreciate you doing us a big favor by taking a few seconds to like this video and subscribe to our new channel. Let's say you did everything right, and you are genuinely ready for prime time and you show up for the opening night. What happens when the curtain goes up on the opening night for your offering? Will anyone be in the audience, or will you be reciting your script to an empty house? If we work together and Robert helps get you to opening night, Robert can then also help find your prospective investors for the deal. Who is the executive, who, in your company for fundraising? For every single fundraising action item, W cubed equals, who, is doing what, when. As CEO, you already have a full-time job. So, if you, the CEO, are not going to be the fundraising, who, then, who, will be the, who, and what will be the when for the, who, so that you do not run out of a runway of existence that may be getting shorter every hour of every day. Who is the executive, who, in your company for fundraising? Now that you're ready for prime time and ready to start raising the money and asking for the check, who is competent and knowledgeable in your company to pitch your deal to investors? This is probably one of the most important, overlooked points when companies decide to raise investor capital. Imagine the curtain going up and you actually have an audience. However, there is no actor on stage playing their part, because no one has time right now because of their other multiple part-time jobs, or there is no executive competent enough and knowledgeable enough about your offering, and who understands how to sell the deal, and who has the right image to represent the company in front of angel investors. You need someone to be this lead actor, either from inside the company or an experienced fundraising mentor like Robert who understands and knows your company and knows every nuance of your offering by heart, and he knows how to properly pitch the deal the way it needs to be pitched. Note, you usually have one and only one shot with each prospective investor. Don't waste a single shot. This means that your who has got to be totally competent and knowledgeable, or every shot that who shoots will be wasted out of a very finite number of potential shots in your fundraising universe. Who in your organization will be the who that does all of those mission-critical full-time steps and is the driving force for fundraising as their top priority, in addition to the other functions they already serve in your startup company, and totally understands every facet of the company's vision along with understanding and being able to explain every number in the business plan and detailed 5-year financial projections, and be able to explain the driving assumptions behind the major moving parts of each and every facet of your financial projections and can get all of your fundraising done in 3 to 6 months with everything else that they or you are doing. Will it be soon enough to beat your competitors to market, or before you run out of your runway of existence? Do you even have someone in your company that could realistically even be your mission-critical who? Who has both the talent and time to get out in front and actually communicate and knowledgeably pitch, close and actually collect the check from prospective investors and deal with the tire kickers? How is all of that going to happen if you, the startup company CEO, are that who, with all that you already do? Since it is a violation of both state and federal securities law for you to pay any finder's fee or success fee or any other kind of contingent fee for fundraising, who has the knowledge, time, sales training and competency to be the who that will identify, qualify and close each potential angel investor for your company, without inadvertently or intentionally violating securities laws while they do it? If you are even thinking about trying to pay a finder's fee or success fee to someone, please check out successfees.com so you really understand the very rare exceptions to these company killer risk factors. With Robert's help, you can greatly improve your chances of being part of the 6% success for raising investor capital from angel investors. By utilizing Robert's help right now both in designing and structuring your fundraising documents and refocusing your 5-year financial projections, along with his coaching you on investor speak, could significantly increase your chances for your startup to rise above the noise level and be heard and get funded. If your pitch isn't heard, you will not get funded and you and your company will just become part of the 94%. Obviously, there can never be any guarantees whatsoever when it comes to fundraising. Even if you do everything perfectly right, have a great business model, price your offering correctly, have a great management team, etc., and even have a great fundraising mentor like Robert, there is no guarantee whatsoever of success. There are simply way too many variables, too short a runway for your company to last long enough for funding, too much competition for the same investable funds available from the same investors, new competition for your products or services, changing investor attitudes, adverse macroeconomics, global politics, etc. for there ever to be any kind of guarantee when it comes to fundraising. However, if you want to have your best shot at being in the 6%, you have got to do it right and do it right now, especially since your future, and the future of your company, depend on it. But this only works if you decide to use Robert's help while there's still time. If you wait too long, probably no one can help you. But with Robert's help right now in structuring your deal, fundraising documents and refocusing your 5-year financial projections and their driving assumptions, along with his coaching you on investor speak, you could significantly increase your chances to rise above the noise level and be heard and get funded. Imagine your improved confidence pitching your deal to investors. Robert's process of properly creating all the documents and meaningful projections that prospective investors expect to see, in the format they expect to see, will give you greatly improved confidence to pitch your investment deal to your prospective investors and convey a much clearer and much more believable vision of your company's future success. Improved confidence pitching your deal to prospective investors equals more checks. Ready for Prime Time includes Robert training you on how to best pitch investors, how to totally know and explain the important numbers for your deal and how to properly project your honest, great vision of your company to best entice and motivate investors to stroke the check for your great investment opportunity. Want help connecting your company with investors in Robert's network? Robert helps his clients make sure they are genuinely ready for prime time, including being fully coached on fundraising and every important nuance in their documents. Then, Robert helps get them connected with startup company investors in his network of individual angel investors and large angel investor groups. Could you benefit from a highly experienced fractional who, for your fundraising? Robert doesn't just advise, he rolls up his sleeves and can help with all the heavy lifting for all of your 53 steps. Solve all your who issues by tapping a few hours a week of our affordable fractional chief implementer for all 53 steps required for fundraising success. Robert is the highly experienced fractional executive who, for all of your who needs. As a founder and CEO who raised $4 million from angel investors and VC for his software startup before taking the company public, and founder and CEO of his investment company that bought $100 million of commercial property after successfully raising over $30 million from 1,200 angel investors, Robert is uniquely suited to be the fractional who that can help you right now. For all of the details and pricing, check out our links. Exactly how will you successfully complete all of these overwhelming tasks without Robert's help and experience? When you've completed your due diligence on us and our companies and have decided that Robert is the right who to help you right now to improve your chances of major success by being part of the 6% of companies that succeed in receiving funding from angel investors, please let us know so that we can start accelerating the success of your startup immediately. Are you ready to rise above the noise level and be part of the 6%? Get in touch now. Email Robert today at ceo@chiefi.com. We hope you found this tutorial helpful. If you gained at least one aha moment or epiphany, we would very much appreciate you doing us a big favor by taking a few seconds to like this video and subscribe to our new channel. Thank you for your time and interest. Best of luck with your startup company and your fundraising. Note, all prices and terms are subject to change and to Robert's time availability. If you hire us, you work with Robert, not some inexperienced subordinate who lacks his 3 decades of experience. Since there is only one Robert and he limits the number of active clients he works with at any one time, he will not always be available to work with new clients. We strongly recommend signing up for our Chief Implementer service at your earliest convenience since Robert may not be available to new clients at a moment's notice to help you with your company's critical needs. Get in touch now. Email Robert today at ceo@chiefi.com.